All right, we are back with the Freedom Framework Show, and this time we are with Ravi. I met Ravi in a community called Hampton, and I think his background is actually really interesting for where we are in society right now. So he is an engineer by trade focused on robotics, and he's now going the complete opposite route and going to more of the service-based business, and he has a really cool story. So Ravi, great to have you on.
Yeah, thanks a ton for having me on, Sam.
So, want to give the listeners some of your background? We can kind of dive into what you're working on now as well.
Yeah, for sure. So I grew up in sunny Southern California, right outside of Los Angeles in the desert. Um, I grew up a pool boy because my dad had a chain of pool and spa supply stores. So if you're not familiar, you go to your neighborhood pool and spa store. My dad had a franchise called Magnolia Pool and Spa Supplies, and I used to run one store in Huntington Beach. And I had my own truck, and I used to literally clean pools, run acid washes, install pumps. Um, Went to college to get a degree in mechanical engineering, and had a short stint at NASA where I worked on the jet propulsion team. So we were trying to build a more efficient way of planes to be able to basically use up all of their fuel when they're flying instead of burning it inefficiently. Right? That's kind of what that was like our main project. Um, did about a year and a half in India actually, running a small venture fund where we would focus on poverty alleviation. We would focus on companies that were working um, on building products for people who earned less than $2 a day. And that's kind of actually those two threads are what gave the idea for my robotics company, Sutro, which I first founded in 2014, to be able to measure water chemistry because water was actually a really big problem in India. Um, Immature for a startup founder to try to sell to the Indian government. It like we probably would have died on the vine if we continued. But came back to the United States and pivoted the whole model around back to pools and spas because that's kind of where I started with. And that's kind of what starts my journey back in the pool and spa arena, from merging robotics, this kind of poverty alleviation around drinking water, as well as a device that measures water chemistry and water cleanliness.
So, what was that like, right? Living in India, working in an environment in which you're supporting people who are the lowest of the low income, right? Like, what was that like in terms of on a personal level, going out and living there, experiencing that, right? How that kind of shape mentally kind of who you are as a person and kind of what you're working on today as well.
Yeah, it's a really it was a really interesting experience. I grew up in the US, right? Like I mentioned, I grew up in suburban America, deserts outside of Los Angeles. My parents came here as immigrants, right? They came here as Indian immigrants in the 70s, 80s. And so I grew up this kind of very dual American Indian life where I was, Indian at home and American outside. And then it was a real big kind of 180 when my entire identity in the United States is that I'm Indian, right? When I'm in a group and I go to high school, they're like, "That's the Indian kid, Ravi." You go back to India, and I'm not the Indian kid because everybody over there is way more Indian than I am because we're in India. And so it was this kind of reverse culture shock of you think you're one particular identity, Indian in the U.S., and you go back to India and you basically flip, and now you're like American. Um, that was this like really interesting underlying movement that ended up happening kind of in my head. Um, Above that, there was just the really interesting work we were doing with your question you asked of folks that were living on less than $2 a day. Some of the projects we worked with actually were really interesting. We worked with a bee company called Under the Mango Tree, which basically gave bee boxes to rural farmers to help them kind of cross pollinate their crops through a nonprofit model. And then the for profit entity would basically come in and buy the honey and then sell this like premium organic honey into, really large hotel chains, like the Taj or the Oberoi. We worked on a really interesting model with a cell phone company where we would get like Motorola flip phones and give them to rural farmers. So we could basically like text them. This was back in 2011, so Twilio and all this stuff didn't exist. Um, to be able to tell them what actually weather information was, right? Because we didn't have data. Data was really expensive. Phones were expensive back then. And then a really cool model around women's empowerment and poverty alleviation around getting cheap solar panels into villages so they could have basically village electrification. So instead of spending a bunch of overhead in dollars and rupees on getting power lines to villages. The cool thing about solar is you can basically decentralize power generation if you get solar panels put inside of villages. And so we had this project where we helped people become micro entrepreneurs and actually selling the little solar lanterns that we had, as well as actually building out the model so that people can just get more light in the village at night. But it was really really interesting.
Yeah, I think I can touch on the first point you made too about like the cultural identity, right?
Mhm.
Of your who you are when you're in America versus who you are when you're in India is just a whole shift, kind of based on sliding scale. And yeah, I think it's a really good experience you had there too, in terms of having to go get really creative and scrappy and kind of building those things out there and just seeing what the other parts of the world live like, right? I think that that allows you to bring back a lot of innovation and creativity and perspective when you come and start building here in the States for yourself. So after you did your stint in India and kind of worked on that, what was next for you?
Next, I initially kind of seeded the idea for Sutro, which is basically this robot that remotely measures water chemistry. The origination of that idea came about because we were looking at a lot of deal flow, right? Obviously, we had this solar panel project, the farming project. A lot of what we got on our desk was around water issues, because India has a big water problem. Diarrhea and dysentery, which is basically transported through water vectors, is the largest killer in the world, due to dehydration, due to people getting diseases through that. And so a lot of the products and companies on our table were around filtration, right? It was like, let's just filter the water. Let's like make the water cleaner. The more you look into water chemistry, it's different for each of the applications you have, right? And what I mean is your swimming pool water, talk about that because we're probably about to go into pools next, needs a very high chlorine content, right? You put chlorine tablets, liquid chlorine inside your pool to kill off the bacteria. But you wouldn't take a cup of drinking water and basically drink that. Um, at the same rate, you probably wouldn't use your drinking water to water your crops, right? You want to put fertilizer inside there, you want nitrates, phosphates. Water starts off as like a particular, starts off at like zero, and then you add certain things into it or for it based off of what you're actually doing with it. And so if you take what I just said with water filters, there's a discrepancy, right? Because water filters will like filter out everything. And maybe you don't want everything to be filtered out. And so when we looked at what's in the water sensing market, there was a huge disparity between really, really expensive sensors that you have in labs versus like test strips. And you guys are probably all seen like swimming pool test strips. They use the exact same test strips to measure drinking water. And that's prone with human error, right? You need to like measure it, you need to look at colors. And so we found this like sweet spot in the middle of there's really no affordable sensor that is autonomous and that has a high accuracy of data that's able to actually tell you what's in the water. So then you can better pair what you do to fix the water. And so we basically built out the sensor. I ended up sketching our initial model, which was taking the existing way that you measure water chemistry, which is those little drops of color, and we shrunk that thing down basically to 1/50th the size. And that was like the initial prototype. I initially tried selling it to the Indian government and pitching the concept around. It just there was so much red tape. I mean, I remember in India getting like a cell phone or getting my internet. You had to like walk to the bank, walk to the cell phone. You had to get like a signed note. There was no way that this coconut, right, this like American Indian going to India now is going to like figure out how to navigate all of the Indian bureaucracy to sell something in a critical infrastructure product like water. And so I really wanted to stay in India, but like ended up coming back to the US again and moved to San Francisco, in which I had a few jobs. I worked in like consulting and kind of in and out of a bunch of different things, but this idea was always in my back pocket. And over the course of probably about 2 years, 18 months to 2 years, I pivoted the model because I started taking my dad's pool stores from brick and mortar into online retail. This was like the beginning of Amazon, right? 2012, 2013. We opened up an online store, and it just hit me that like there's my dad's store, which is e-commerce. We're bringing that online. I have a smart device. You saw like Nest and Ring and all these companies starting to kind of explode at the time. Why not make an IoT, a smart robotic device that measures water chemistry the test that we used to do inside the pool store and pair it with the e-commerce piece so we can basically get you the chemicals you need when you need them, which was the same model that we had in India, right? Let's measure drinking water to better pair it with a filter to actually measure if your water's clean or not. And so that loop was the same. It was just for an application for swimming pools because I had a background in that. And so that kind of leads us up to, yeah, starting the startup in San Francisco.
So it makes a lot of sense, right? Like taking those same things you're working on already and just finding a really simple solution for something that was really commoditized, right? Like figuring out how do you make that easier to go read, how do you go take out human error, and how do you make it really easy to transact and get what you need. So it makes a ton of sense. So now you start scaling Sutro. What was that like? Right? Where did you get it to? Because I know now you've since exited the company. So help us understand like that business trajectory piece of it that got you to that place of exit as well.
Yeah, for sure. So in about 2014, 2015, we incorporated Sutro and raised about just over 1.7 or 1.5 million, if I recall correctly. We had really interesting investors. Amazon Alexa, when they were starting the Alexa fund, was one of our investors. Really cool model and thinking on the Amazon side, right? They had the voice assistant connected to the entire Amazon store. How do you connect IoT to the voice assistant to basically be able to tell you information about the world around you and then order things from Amazon, which was kind of our model that we had. Um, we initially, when you're building hardware, you try to take things that are off the shelf, right? So I had this kind of efficient way of measuring water chemistry, but from an investor standpoint, they want you to get to market quick, obviously, right? You want to build product as cheaply and as quickly as you can so you can get them into market, start getting data, and then basically build out a V2 or a V3. There are off the shelf products that are water sensors that you can buy that, and I won't go into too much of the technical detail, but they're called these glass bulb sensors, and I'll make it as easy as possible and not spend too much time on this. It's important to understand this because it shows why our technology is better, and it'll make sense in kind of what I'm about to talk about next. So there's these glass bulb sensors. The glass bulb sensors basically, the best way of explaining why they are not accurate is to imagine a speedometer on your car. If you're going at 80 miles an hour down the freeway and your speedometer is reading 40 and the speed limit is 80, you're going to speed up, right? Because you're 40 miles lower than you should be going. Except for if you start to speed up, you'll be over the speed limit. And that, from a speed perspective, you're just going up and down. I give you a very binary example, can have really bad repercussions when you're looking at water chemistry. If your chlorine is lower than it should be, but your meter is saying that it's higher, you're going to put more and more chlorine inside of there, and that's not going to be safe for you to swim in, right? Um, we tried that, and we very quickly realized we deployed about 200 sensors. We sold them, and it just didn't work. The data was completely a mess, and you can't build a product that has garbage in and garbage out data. Um, so we pivoted back to using this microfluidics, right, which is your swimming pool test kit shrunk down to 1/50th the size. That takes a decent amount of R&D, decent amount of engineering, and so a lot of the capital that we use basically went into building that. Um, as we were raising kind of our seed plus to go to manufacturing, we ended up pitching to a bunch of strategic investors, and through that process ended up selling to a chemical company out of Canada. You can think of them kind of as like the Clorox of Canada. They're one of the largest chemical distributors, bleach and chlorine distributors. Sorry, not bleach, just chlorine distributors in Quebec. And we had this model very similar to the Amazon Alexa model, that if we as a sensor company pair with the chemicals, we can build this closed loop system that allows people to better understand their water chemistry, and then we can treat them with the right chemicals. And so that kind of fast forwards us to 2019, and we sold pre-prototype, or prototype with a handful of patents, with the kind of main objective of actually going into market and getting the product out in basically less than 2 years.
So you sold the company within 2 years, or okay?
So I sold the company within about 3 years. So from 2014 to 2019, we built out the R&D, the engineering. 2019, we sold the company to Sani Marc, the Quebec company, And by mid 2020, we basically had a goalpost to launch the product for general availability to the market.
Got it. So you were already exited out of the company, sold prior to going to market.
Yeah, correct.
Why would you, right? So like help me understand on my end, like why would you choose to go exit that early? Right? Like did it make sense financially to do so? Did it make sense from my perspective of getting the product out quickly? Like help me understand kind of your thought process around that.
Yeah, as we were raising that seed plus and everything that I mentioned on not being able to use off the shelf technology put us in a bit of a precarious position around spending a lot of dollars on R&D, right? You look at the kind of what's happening today in robotics, NVIDIA, Figure, it takes a lot of capital to actually pump plastic to make electronics. You're not, I wish I could just open up and spin up an AWS server and like launch code, but I have to do that too. And I also have to actually make something that connects to that. And I spent a good 30% of my time in China for the next year and a half between 2019 to 2020, working on the factory floor, right? It takes a lot of knowledge to make plastic. And so to kind of very directly answer your question, it was a speed to market issue, which is why we ended up selling. And secondly, because we were making this proprietary technology, we just needed all the support we could get, and making a decision to work with the strategic and selling was a lot better than just kind of continuously going around and spending my time raising capital, because we really wanted to see the light of day for the product to hit market.
Got it. Okay, yeah, that makes sense too. So now, and that leads us into what you're working on today. I think this actually goes back to just a really big theme is that you're seeing people who, like yourself, right, extremely educated, extremely intelligent, now going back and looking at these service companies that used to be looked down on. And I think
Mhm.
now they're making a massive, massive comeback. So what are you working on today and kind of what's your driver behind it?
Yeah, we're working on a concept called Poolify, which very simply is a pool route roll up concept, right? Um, Coming from the industry, growing up as a pool boy, starting Sutro, making the first, the leading robotics device in the swimming pool industry, we just really saw that the way to get into market now is by using folks that actually touch the end consumer. We could go B2C, right, which we've done. We sell on e-commerce, we sell on Shopify. But if you look at the swimming pool route concept, and let's just kind of shine a spotlight on what a pool guide does, they primarily will sit in a pickup truck. They have chemicals in their back, and they basically drive around on a route, right? A route is anywhere between 50 to 100 pools. In general, a given person can basically do about 20 pools a day. And so you're doing what a pool guy does, right? I mean, I think all of us understand what a pool guy does. They park in your driveway, they walk into your backyard, they test the water chemistry and dose it with chemicals to make sure that your water is safe, and then they just generally clean and make sure that your pool is running okay. Um, there is a lot of mechanical and electrical equipment. Is your pump okay? Is your filter dirty? Are you like wasting a lot of energy because your filter's dirty, so you're pumping more water in? They'll check all these things in that entire process. If you anybody can just go to Yelp right now and look up all the one-star reviews, go into an area that has swimming pools, go to Phoenix, go to Austin, go to Miami, go to Los Angeles, and see why pool companies have a one-star rating. There's two major reasons. The first is they get a phone call that their pool went green because they didn't know what was they had a party or something like that. If Sam's pool service visits a home every single Monday, and if I have a party on Thursday, that pool is likely going to be green on Saturday. You're getting a phone call on that Sunday because you're too late to see what actually happened to the swimming pool. And the second thing is that people just don't show up, right? Many times, I think in service in particular, I don't think folks are paid what they should be. I think there's just kind of a skill given cost level. And so what we want to do is basically change those very simple two things that are the one-star reviews. We looked at thousands of one-star reviews, and that's what we're building our model around. How we're going to solve the chemistry issue, I built the leading robot for chemistry management, right? If we deploy those robots inside of the swimming pools, we can measure and we can see what's happening in the pool. The pool guy can have eyes on the pool to measure what's happening with the water chemistry. So that party that I had on Thursday, Sam's pool service is able to catch it on a Friday or Saturday, because you get an alert on your dashboard that Ravi's pool's chlorine content is going low. You can fix that before you get that phone call. And secondly, we have a program that we're developing that allows us to basically link pool service technicians together. So the whole not showing up issue allows us to kind of basically reward and give service technicians the ability to hop into and bid for swimming pools based off of particular insights or indicators on who needs service, right? Either you requesting that you need service or the actual robot telling you that something is wrong with the swimming pool. And so that's what we're rolling up with Poolify now.
So walk me through that typical person doing a pool route, right? So people understand the economics behind it. So Joe, who has his pool route, he sees 20 pools a day or 100 pools a week. What does he get paid on a per pool basis typically?
Yeah, a lot of it's probably good to like take one step back and understand the industry of pool service techs, and then I can definitely answer that question.
Sure.
The swimming pool industry, especially for service techs, are very long tailed on this nomenclature we called the single polars, which is a pole that you use to clean your pool. This is one guy that has a pickup truck that basically cleans 100 pools. There is another part of the market which is like your franchises or business owners that have multiple Joes underneath them, um, and you might have a staff of 5 or 10. You're doing like 1,000 or 2,000 routes on the single polar market, which is the one that we're actually targeting, because that's the long tail and where the majority of the folks are. On average, Joe himself is actually self-employed, right? He has picked up routes himself, and the margin and the economics there are basically anywhere between 35 to 50% of what Joe would take home, given the pools that he's cleaning. If you're in like California, if you're in the Sun Belt, California, Arizona, Texas, or Florida, Joe would probably be making or charging about 150 to $200 per month per pool, and so he's taking anywhere between 60 to $80 per pool per month, and yeah, that's the economics of kind of what Joe's taking.
Got it, interesting. Yeah, so most of them are on because I've owned a handful of houses with pools, and most are on these monthly recurring schedules, right? They
Mhm.
come once a week. If they're say an Airbnb or a short-term rental, they come twice a week, right? In terms of maintenance around it. So Joe, for example, he has 100 pools he's working every single week, right? And with that, he's taking home, call it $50 a visit, right? So $5,000 top line. So looking at $250,000 per year, roughly, in terms of revenue per person. And they're
Less than that actually. So he's making 150 a month. He's taking 75 a month home, or 50, 80, 70, 50 to 75 a month home. So per visit, he's taking like $12 to $20. So
got it,
like 12 to 15.
got it. Okay, interesting. Okay, cool. And now you're looking at going out and buying these routes. Like, what do these routes trade for, right? Because I know you mentioned, and I think you're spot on, right? When looking at the single pole person who's managing this, it's likely a super inefficient market to go sell them, right? We see it really similar as to real estate. I have friends who buy apartment complexes that are $50 million plus, and
Mhm.
what you see is that those trade at usually a few basis points either way of par value, right? If it's worth a dollar, likely it's going to trade between 98 cents and a dollar oh two, give or take. But I also have friends who buy apartment complexes below 5 million, right? And what you see there is that those may trade for anywhere between 70 cents and a dollar 30 of what they're actually worth because of the inefficient market. And I feel like the single pole route is very similar in that sense too. So help me understand how you're finding them, how they're valued, right? Kind of what you're looking to go do there as well.
Yeah, from a value perspective, it's really interesting because the pool market will value routes based on. It's funny when you see like metrics of like how much is your route worth, Sam. You'll say like 10 to 12x monthly, right? And so it's very similar to what you just said, right? You're getting anywhere between one to under one, because 12x monthly will be a month given revenue. And so a lot of the single polars you may not get EBITDA um, calculations on them, right? They'll kind of give you their QuickBooks, and a lot of it's kind of just do you feel okay in the book of contracts that you're buying, right? Because basically what the transaction is if Joe the pool guy has 100 pools, I'm buying the list of customers for the 100 pools, and then becomes your question of what's your customer acquisition cost of just actually acquiring those 100 pools on doing Yelp ads or Google if you were to just stand something new,
Sure.
versus actually taking those on. And so we've basically built this proprietary kind of calculation sheet that's more core to the pool industry that takes indicators such as like house price, right? We kind of look at like just general market demographics of is there a way to actually tack on more services on top of this? Underneath that is an entire layer of the business mechanics, like how long has Joe's pool route actually had these 100 customers? Are they less than a year old? Are they 20 years old? And then the third part of what we look at is a lot of these single pullers fall into one of two categories. Either they're like a retiring demographic, which in that case we kind of flip to what does like legacy planning look like, what does retirement look like, because we want to help these folks basically on board so that they don't one get a really large tax hit of taking their entire route's money at day one, and then secondly, how do we like time into the upside like later down the line is kind of one demographic. The second demographic are folks that are just younger, that have like maybe just entered the industry 7, 10, 12 years ago. And they're trying to build something up for the next 10 to 15. And so for those folks, the kind of math becomes very different because they likely will stay with the route, and stay with us as we begin to talk to them. And so yeah, I think that answers your question around the 10 to
Yeah.
12, and then we don't really have the EBITDA as well as the demographics of kind of who we're working with.
Yeah, I'm guessing that the single pool owner who's on the retiring age spectrum likely doesn't have the cleanest books in which you're taking over,
Yeah.
right? So there's definitely a lot of assumptions and guesswork. So with that in mind, right, kind of the structure you're proposing likely has a level of seller financing, potentially a level of seller earnout, right? Like walk us through a structure you guys have used in the past for this and like be really specific as to what did that look like, right? How'd you go create that win-win? Because a lot of people listening to this show right now as well, people are looking to buy business for themselves too, whether it be in the pool space or something entirely different. I think a lot of the structure itself applies across a ton of industries, right? People
Mhm.
who are looking to go retire, who don't want to go incur a massive tax bill, who want their name and brand to be taken care of,
Yep.
and who want to figure out how do I go have potentially some level of residual income in the future as well.
Yeah, totally. And so what we're doing with one particular deal that we're working on right now is looking at basics. So we're going to buy up 90% or 85% of the equity of the company, um, at today's kind of sell price, right? Today's par value, today's market price. That one is trading at about 13x monthly. So we're just over the one. We're like at 1.05 revenues or 1.10 revenue. Um, in that particular one, we're going to do a 5-year earnout that basically has this dollar amount for the 80% paid out over 5 years. And so, in a sense, we're giving 20% down today, right? That's kind of like the way that you would look at it. In that particular thing that we have an offboarding where that particular owner is going to stay with the company for the next year, and we're going to turn what they were currently making into a salary, right? So if they're taking home 80K, we'll pay them 80K. That kind of, in a sense, is what I call like the origination contract in my head, right? That's like up until today, as we're taking over the book of business, this is how to make this particular person whole. What we do next is then we put our marketing on top. We built like a custom marketing stack. We have all of our back office pro forma synergies that we're going to basically pull in. And then we have our proprietary sauce, which is the robotics, the software that we're developing. Again, remember we're tech guys, right? So we're throwing a lot of tech at this, and that stack in particular, as it ekes out more pools, right? So when we go from 100 pools to 101 to 102, 103, those future pools, and we're still in the middle of negotiating this, have some outwardly heavier split towards us, right? So we're kind of like, look, you Joe Pool Guy had your 100 pools, and we want to make you whole with that 100 pools with this particular mechanics. And then it's kind of like what happens starting at day two or at day one. And then the day one mechanics obviously lean a little bit more heavier to our side because we are coming in as partners, helping grow the business, grow the book of contracts, etc. And so that's kind of like a few of the elements of like a particular deal that we're looking at right now.
Got it. And I think it's really interesting too, when we were talking before we hopped on here and I hit record on how you're finding deals. Like walk us through what this system looks like and it's about as sophisticated as you can get.
Yeah. This, happens again because I think I was born in the pool industry. I've been in it for 10 years. I'm literally sold the robot into the pool industry. Um, the first is we obviously look at all the top line stuff that's out there, right? You look at like nationalpoolroutesales.com. There's a bunch of these websites. Anybody can literally Google buy a pool route and you'll find a bunch of websites. In those particular websites, there's obviously a broker fee, but sometimes the deal is just too good to be true, right? It's in a particular geography that we want. We'll take a look at them. Underneath that, there's a network of camaraderie and knowing the industry, right? Just because I've been in it, there's pool and spa shows, which is where we find a lot of pool service technicians. There are distribution centers, right? So if you go, we have distribution contracts with a lot of the distribution houses in the US. So there's like Pool Electrical Products, PEP, there's SCP, Pool Corp. Those are places when you go and you buy chemicals, you build camaraderie with the folks that you're working with, right? There are other pool service technicians that you can partner with that you can potentially buy, and so again, we don't take this as a very just go and suck up all the pool companies. We're looking at this as more of building a partnership to help drive more local connection. Um, and a point that you made that I actually want to touch on for a quick second in the question you asked me before of how do you maintain the legacy of kind of a business owner that has owned and managed a business for the last 20, 30 years. One of the things that we're doing is we are going to keep the brand name. I feel very strongly that if somebody or a business owner has built a brand that they're passionate about, not only does it make sense for them to keep the brand, right? Just their emotional connection to it, but also the local geographic connection to it, right? They've sponsored high school football teams. They've
Sure.
worked with the particular like they have a DNA in that particular locale and geography. And I think just slapping a name like Poolify or something like that on top takes away from the ethos of a business that very much inherently is local. And so that's kind of a third piece that we're going to also keep in play when we acquire these businesses.
So, with that in mind, right, I know the intention is to go get a level of scale and go look to go roll those up as well, right? When you look at the roll up strategy behind it, usually it has a lot of things tied to systems and process, eventually branding behind it too. How do you plan on combating the balance of keeping the local name, right, with the potential of having them co-branded for potential exit to someone like private equity to go actually buy the whole portfolio itself?
Yeah, we're gonna have to think through that. We're kind of in the process of discussing it. I think right now, off the bat, the way that our strategy looks like is if we acquire Joe's Pool Route, it'll likely just say a Poolify company underneath. All of the back office immediately will come from Poolify or our kind of network of brands. And so when you get an email, right? If a customer gets an email saying, "Hey, Joe's Pool Service is going to be at your pool to clean your green pool this weekend," that email gets sent from a Poolify email address, right? So there's going to just inherently be a connective tissue between understanding that the technology that's backing this is Poolify and that also Joe's Pool Service is now a Poolify brand. Very similar to like the Ace store network, right? Where a lot of them are private, but then they have the Ace name. I think what we want to do is eventually move towards that Ace strategy, where maybe at year 2, year 3, year 4, there's just a little bit more priority on the Poolify branding, and then eventually it kind of like moves into Poolify because the customers will then have gotten close to understanding that's what it is. That's one thought. The second thought is there may just be value in actually keeping local brands, right? And so I think it's a hypothesis we need to test. Um, you see a lot of recoil right now around like the big splattering of like trucks with like big brand names because I think consumers, including me, have like an averse reaction towards and I know a lot of your audience is private equity, but towards private equity, if you think about it from the consumer standpoint of like if you see that big plastered thing, do you think that there's going to be lower quality or like they're just trying to eke out profits, right? And I know that's like a stereotypical thing to think, but part of us in developing this model is like how do we move away from that perception but at the same rate get the scale, the robustness, and the systems that are valued from having a model like that, right? And so there's a little bit of a line to walk that I think we need to figure out as a brand and as a company.
Yeah, it makes a lot of sense, right? Because the biggest relationship you have is that with your customers, right? In terms of If Joe has built that pool company for the last 30 years, right, and they have a good relationship there, the likelihood of them staying with Joe's pool company, they've been there 30 years, is probably pretty high,
Yeah.
right? That relationship, that brand value, that loyalty too. So I think the buy of, Joe's pool company by Poolify makes a lot of sense, kind of transitioning over time too. With that in mind too, like what we've typically seen other asset classes like service companies that when you get a level of scale, the valuations grow dramatically.
Mhm.
So, for example, right, we're in the paving industry right now ourselves, where we can go buy companies between 2 and 4x EBITDA. And when you get to a level of scale, say 10, 20 million EBITDA, that number jumps up to 8, 10x, right? In the pool route space, what does that look like? Is there a level of multiple expansion and kind of how does that typically get structured?
It seems like there is. Private equity is entering the space. They have been for the last 3 to 4 years. A lot of the larger whales, as I mentioned in that kind of long tail model, have already been picked up. Trivest is a large player, right? The movement is a little bit slower than kind of what it has been in like the other services industries. One, because a lot of the big guys have already been picked up, and secondly, I think a lot of the long tail, like I said earlier, is in the like sub 100K, sub 200K EBITDA single pullers, right? This is like the 500 to $1 million routes where you're doing 100 to 1,000 pools. Um, that becomes really inaccessible for somebody like private equity to work with. And so I think what we're going to see in the next 2 to 5 years is a lot of work being done with the single pullers to figure out how to aggregate and consolidate and make their businesses stronger, such that potentially they can get to that size and scale such that they'll be picked up. And so I guess the short answer is like I don't really have an answer. Like we are seeing that there is some movement in like the larger space, and definitely there is multiple expansion. And I think the story holds true for a lot of the service industries, a lot of just private equity as a model in itself. But in the pool model itself, like we haven't seen that yet because a lot of them are these like single pullers.
Sure. And I mean, for you, then it's probably a better time to get into the space too, right? I think a lot of these industries that have been very heavily targeted, right, and very heavily rolled up, that they lose a lot of that delta in terms of value,
Yeah.
right? Where I think if you have the ability and systems and process to go on and take these companies that are doing effectively 100, $200,000 of earnings, you can have a lot of margin there in terms of margin of safety. Right? When you look at buying a company, I think right now industries such as say HVAC, right, they're trading for 6, 7x for $1 million earning companies. Your margin of error becomes really small,
Hmm.
right? So I think when acquiring companies like you are, right, pulling them off of pool boards, right, you have the ability of getting really good value. And I think in this space, in real estate, in any space they're in, if you buy the companies or the assets right, that can help make up for a ton of sins in a lot of other areas and give you a lot more margin of error in kind of nailing this the right way.
Yeah. 100%. I totally resonate with that. And I think the other thing to state here too is the pool service market, given the total available market of pools, only caters to about 15 to 17% of the total pool market, right? So like 85% of people that own pools are not serviced by pool guys. And so there's an entire like market expansion question here that we haven't even tackled yet that I got 10 years of experience with Sutro building because we were a B2C commerce play, right? So selling direct to consumer, taking that knowledge and attributing it to growing pool service routes, I think is like a very unanswered question here because there's a large part of the market that doesn't even use your service.
So, how many pools are there in the US?
There's around 14.4 million, or last that I saw as of like I think 2017 data, 14 to 15 million pools and spas in the U.S. So around 12% of U.S. household stock actually has a like a recreational form of water in their backyard. Out of that 14 or 15 million, it's pretty easily evenly divided into 5 million, 5 million, and 5 million. 5 million in-ground pools, like your typical fully pool you see in suburban California or Arizona or Texas. 5 million above ground pools that you'll see in like the Midwest and Northeast, and then like 5 million hot tubs and spas, those jacuzzis and beachcombers that you'll see. And so our market's this like 5 million in ground because that's primarily the people that live in a home that have a large enough body of water that need to be maintained.
Got it. And of that 5 million, kind of what percentage like that percentage is only about 15% are actually
Yeah,
actively managed?
correct.
Got it. So you're looking at, you know, 4.2 million or so
Exactly.
pools that are all white space. So I think if you can look at it as how do you go bring a level of modern systems, right, in terms of marketing, operations, sales, go to market around this, you've got a lot of white space where you're not competing for someone else's business, which
Exactly.
that's always much easier to go acquire a customer versus take away a customer from someone else.
Exactly. And that's how we look at the business model.
Yeah, it makes a ton of sense. I didn't realize that those numbers were that widespread.
Which is it's funny to say because my previous life at Sutro sold to the 85%, right? We made a device that helped DIYers better manage their water. But just because you have that device doesn't mean that it precludes you from having Joe coming and clean your pool, having it get ready for a summer party. There's a lot of reasons that Joe should still come and treat your water, measure your water chemistry, clean up your pool.
Cool. I like it. Well, Robbie, it was super helpful to understand kind of what you're working on and what you're going through. And, as a founder who's gone through an exit, right? I think a lot of people here are looking at either buying companies, building companies, right? What's your advice for someone who's thinking about selling and maybe selling early like you did, right? Kind of what advice do you have for that person who's looking at getting into a space and kind of how they view selling? Like what's your, you know, feeling and reaction from actually going through it yourself?
I think feeling it in your gut is really important. I mean, there's like metrics and books and all this stuff out there that people can read, but at the end of the day, it just has to feel right. And like, there's n number of decisions you can make. You asked the question earlier, like, should we have sold at the time that we should have? Maybe not, right? Maybe there was like a completely parallel universe where I would have taken the company on. It would have, would have been what it was. Maybe not. COVID also happened, right? Raising for a hardware company, getting out to China, we might have been delayed, and honestly, may have died on the vine as soon as COVID hit because we couldn't have deployed product. And so I think there's a lot of like things when you look at hindsight 2020 of why you made a particular decision, um, whether it was a good or bad one. And so I think in selling your company, just like making any large life decision, just if it feels right in your gut, if the time is ready, if you have the right buyer, um, you're gonna need to stay with the business for a little bit longer, right? It's not you're not just gonna cut the cord and give it to the buyer. And so I think to all the sellers out there that are, to your question, that were interested in selling, or that are interested in selling, just make sure you one find the right buyer, and secondly, it feels right in your gut.
Cool. Robbie, and then how can listeners get in touch with you about Poolify and what you're working on today?
Yeah, they can find me on LinkedIn at Ravi Kurani, or if you go to ravikurani.com, I have my email address at the bottom over there, and you can just reach out to me.
Cool. We'll link in the show notes. Robbie, thanks for coming on.
Thanks a ton, Sam. This was a lot of fun.